All right, honors econ. So I just put this announcement in Canvas. This is the Unit 5 review sheet. The test, I'm going to open it up this Thursday, and once you finish it, you are done with the class. Congratulations. All right, so that's it. So we got this week. Today, tomorrow, and Wednesday, I'm just going to go through this review sheet. So just watch the videos for the next 3 days. And there you go. All right, so today I'm just going to talk about these financial institutions. We'll get into just the banks, the credit unions, payday lenders, title pawn lenders. Tomorrow, I'm going to get through, about about probably through interest rates. We'll get through types of insurance, property tax, all that kind of stuff, and then that's it. All right. So today, your financial institution's a bank, right? What does a bank do? A bank offers a whole host of financial products, checking accounts, savings accounts, auto loans, boat loans, home loans, which are called mortgages. And then they will even offer things like certificates of deposit and so forth. So a whole host of financial products. A credit union does as well, but what is the difference between the two? Well, the bank is owned either publicly as a corporation or maybe even privately. The bank is for profit, right? They are a business trying to make money. It's not that a credit union is not trying to make money. It's just that a credit union is actually owned by its members. And the mission statement of the credit union is to provide financial services to the members. Okay, so like Delta Community Credit Union. You work for Delta. Now you can be a member of the Delta Community Credit Union. Well, why would you want to do that rather than go to a bank to open your checking or savings account? The reason being is you're going to likely get some advantages on some of those financial products like loans. It may not require the credit score that the bank would require for the same loan. And also you may get a lower interest rate, right? Banks make their money on the interest they charge on loans. The credit union not being necessarily for profit, right? They can have a lower interest rate. So it is advantageous to join a credit union if you can. And again, the reason being is they are most likely going to offer financial products that are going to be able to beat the rates or the terms that that banks would provide. Okay, the payday lenders, right? So if you need money right now, you're not getting paid till Friday and it's Monday, maybe you need some work done on your car, you might go to a payday lender. They're going to give you an advance on your paycheck. You're probably going to pay kind of a high interest rate, and then you would pay that money back come Friday when you get paid or whenever it is you get paid. Most people in this situation would actually use a credit card. The reason being is if they can borrow on the credit card, and you should know this from the work last week we did. You borrow on the credit card. If you make the payment, the full payment at the end of the month on the credit card, then you actually pay no interest. Now, the credit card company is banking on the fact that you will just make that minimum payment and not the whole thing. But if you pay off your credit card at the end of the month, you're not going to pay any interest on it. All right. However, if you have bad credit, right? So that credit worthiness, if you're not able to get a credit card or able to borrow that much, this is where you may go to a payday lender. Again, not a good idea. Most people are just going to simply use a credit card because the payday lenders are going to charge a pretty high interest rate. Title pawn lenders. Hopefully you never find yourself in this situation, but this is where you've maybe lost your job. Okay, so people that are suffering right now from the whole COVID-19 pandemic, some of them have probably gone to a title pawn lender. They've lost their job. They own their car outright. Now they have signed their car over to the title pawn lender. They're given the value of that car as a loan. They pay it back. Okay, so this would be if you're really in particularly dire straits financially. You need a lot of money. You might go to a title pawn lender. Again, this is not a great way to get money. The reason being is you're going to pay a really high interest rate. So if you're able to take out a personal loan or you have a considerable amount of money, you can get from somewhere else at a better rate. Most people will try to do that. Title pawn lender is not something you really want to get yourself into. All right. Okay. Tomorrow we're going to get into investing, certificates of deposit, stocks, mutual funds. Talk about bonds a little bit as well. We'll get into credit worthiness, 3 C's of credit, APR, simple and compound interest, and then fixed versus variable interest. And then the next day we'll get into the rest. So that's it for today. I just wanted you to review that. Okay, so the test will be open on Thursday. Once you get done with that, you are done with the course. All right. I'll see you guys tomorrow.